Today we are going to learn about capital and revenue expenditure. Let's discuss about some important terms before starting our topic. The first one is transaction. Transaction means the exchange of money or money's worth for goods and services. For example, the purchase of raw material involves exchange of goods for money, or it can be on credit also. So in short, we can say that anything which involves exchange of money or money's worth through goods or for providing goods or services. Transaction can be classified as expenditure and revenue. Expenditure means money spent for the purpose of running the business. Money can be spent for anything. For example, for payment of salaries, to for attaining of some assets, or for payment of rent, etc. So it is an expenditure which a business undertakes to run its business. The next expenditure can be classified into capital expenditure and revenue expenditure. Basically, we understand about capital. Capital means those assets which are used for production of goods or and rendering of services for further production of asset. In short, we can say that capital is something which renders benefit for the long term. For example, when we are buying a building, it is not that we are going to attain the benefits of the business of the building in only the current year, but we are going to attain the benefit of the building for a period of long time. So we can say that it is a capital for the business. By business, then comes revenue. Revenue means money earned from various sources of business. The money can be earned through various sources. For example, by selling of things or goods in which the business is dealing, or any other source. For example, if it has invested in some shares, then it may be generating some interest. Then it is also known as revenue. Now let's talk about capital expenditure. Capital expenditure means expenditure incurred to acquire an asset which would be provide benefit to the firm for more accounting period. The expenditure should be incurred for the purchase or improvement of a fixed asset, or asset should not be for resale. For example, if we are buying a building or we are buying a machinery, it incurs a huge cost, and the benefit by it is derived for a longer period of time. Then it is termed as capital expenditure. Then coming to revenue expenditure. Revenue expenditure means outflow of funds to meet running expenses of the business. For example, if we are incurring any cost for sale of our goods, or if we are paying salaries, or we are paying rent, these expenses are undertaken to run the day-to-day workings of the business. So it is termed as revenue expenditure. Now let's discuss about the rules to determine capital and revenue expenditure. First, coming to capital expenditure, for an expenditure to be termed as capital expenditure, it has to fulfill few basic needs. The first one is it should be incurred for the purpose of acquiring long-term asset. As the sentence itself is clear that it should be incurred for the purpose of acquiring a long-term asset. Long-term asset can be anything. For example, land, building, or machinery or plant, anything through which the business can derive long-term benefit. It is termed as capital as a long-term asset. The second one is to improve present condition of a machine or for putting old one to work. Here, improving the present condition of the machine doesn't mean the regular repairs or conditioning of the machine, but it means that if it enhances the working capacity of the machine, production capacity of the machine, then it is termed as improvement in the present condition of the machine. Then it is termed as capital expenditure. The third one is to increase earning capacity of the business. Earning capacity of the business can be improved through various ways, either through diversification in the product or diversification of the business. Then when it is done for increasing the earning capacity of the business, then the expenditure is termed as capital expenditure. The last one is any expenditure, or that is preliminary expenses incurred before commencement of the business. That is any expenditure which is incurred before starting or commencement of the business. For example, incorporation of the business or promotion of the business, etc., that is incurred before commencement is termed as preliminary expenses, and any preliminary expenses incurred before commencement of the business is termed as capital expenditure. If any expenditure satisfies all these conditions, then it is termed as capital expenditure.